And this, I think, has been what has changed completely the way people are using QIS. Instead of sitting in the alternative piece of the portfolio, enter the core portfolio, be maybe the platform providing equity hedging solution, equity carry solution, a rates hedging solution, so on and so forth. And that is actually where QIS can be amazing.
Hey everyone, I'm Vincent, and this is Resonance Spotlight, the podcast where we dive into investment strategies, explore the forces shaping the financial world, and most importantly, get to know the expert behind it all. Today, we are talking about quantitative investment strategies or QIS platforms. These are systematic, data driven investment approaches that are reshaping how institutions and investors think about risk, return, and portfolio construction. And I've got the perfect guest to break it all down. Joining me today is Michele Cancelli, Global Head of QIS Structuring and Trading at Citigroup. Michele has been deeply involved in the evolution of Citi's QIS platform, and he's seen firsthand how systematic strategies have grown into a core part of institutional investing. Michele, thanks for being here and welcome to the show.
Thanks a lot.
All right. So, Michele, before we get into the nut and bolts of QIS platform, let's start with you. So what got you into this field? Were you always drawn to quant finance, or was it something you fell into along the way?
Thanks, Vincent. So I would say I always appreciated quantitative fields, mathematics, physics, mainly when I was younger. And when looking into what to do in life, specifically coming from a really small village in Italy, I was looking for something dynamic that will allow you for having like a potential big growth in your career path and meeting also international people and having a overall basically really dynamic career experience. So finance seems to be back in time the case. Maybe nowadays it's actually technology, but no, back in time was finance the way to go. So that was basically what brought me there. And specifically related to the field of trying to do something more related to quantitative models was to look for something where you can apply, call it applied research to your job. So searching for basically new information in the market and trying to deploy it in some way in strategies or models.
Thank you. So I love really hearing how people find their way into this world. So now leading City's QS platform, I imagine some of your past experience really influence how you think about the business. So what are some of the big lessons from earlier in your career that have shaped your approach to running QS today?
Yeah. So, I mean, I started at JP Morgan, then moved to Goldman Sachs, where I was leading the equity volatility product development team, together with my back in time boss, Quentin Andrea, that is also my boss nowadays, by the way. That was the leader of the QS platform over there. So, really, I think my current role really shaped 8 years ago when I joined Citi. And the early stage of, I would say, my career there was around deciding how to differentiate at the very beginning versus the street and some already existing platforms, and specifically thinking on how to play on our strength. So my strength obviously has been always volatility products, specific in equities, and then cross assets. So first thing first, you start from what you really know well. And this is why also at the very beginning, the platform of Citi was tilted towards volatility products. Secondly, was try to provide also differentiating story, an alternative to people as well to go for other providers and not to simply come up with Me Too products and Me Too concepts somewhat. And obviously those at the same time onboarding some of the good concepts that you learn through your career and also be followed also by the right people, as indeed it happened also with my boss, whereby also we brought here some logic and some basically some business logic, I would say, that made sense. For instance, the moment we started here, we created a full cross asset team integrated in one pod, trading structuring in the same under the same hat, somewhat designing the full ecosystem really well, even before starting working on it.
Okay, right. So let's set the stage for our listener. So if someone's hearing about QS platform for the first time, how will you describe them? What do they do, and how do they fit into the broader investment landscape?
Yeah, actually, given the popularity of QIS lately, I've been asked this many times. I will say I'll describe it as such. So to me, QIS is no more than the aggregation of simple transaction in one um, in one place, no, in one index. Okay, an index ultimately could be seen as an application that is simply doing a lot of things for you. Each single action being something really really simple, then rolls up into an app or something that actually is really simple to use for the end user and investor. So really, let's say that QIS starts from data, basic data, typically option data, single stock data, swap data, raw data, and simple ideas of maybe I want to buy a call option every day on those strikes or sell a put option on those strikes. And instead of having someone executing this every day on screen for the investor, you simply say, what about I wrap this up into an index? What they say, multiple now decades ago, people created by when creating equity benchmark, S&P, Euro stocks. Ultimately, those are just indices aggregating the purchase of single stocks into one index. QIS is this exactly the same, simply on slightly more sophisticated transactions or maybe more tilted toward options, for instance. And then basically the popularity of it comes from, I would say, the way, the fact that it's really easy to use as a product because you're able to wrap extremely labor intensive uh, simple yet and hopefully smart strategies into one single transaction. So do I think is what the OS is.
Okay, so essentially, it's about using data and technology to build investment strategy that follow clear rules, so systematic strategy. How does it work actually, behind the scene? I'm trying to, maybe we put for our listener to get an idea of how the factory looks like from the inside. If you could walk us through the process, from designing a strategy to executing it.
Yep. Maybe actually indeed going through the production cycle of one strategy allows you to understand really well the ecosystem. So let's assume you want to develop a new strategy in a new field. I don't know, could be option on treasury futures, let's say. First thing first, you need to have the data because you need to do some research. So you need to start with data. You cannot just start from a blank piece of paper. Data first. So this is the most important item that everybody needs to dedicate time to clean, to have it available in the right format, be able to also use it afterwards. Then you're going to have some dedicated people that we call pro developers, which are ultimately, you can see them as you're going to have, we run the business as a cross-asset head of um, volatility development and a cross-asset head of linear development, rolling up into a global head of pro development. And then under those people, you have the specific specialist per each single asset class. So you're going to have the linear commodity specialist, the volatility effect specialist, so on and so forth. So it's like a bit of a tree, no? So you say, the specialist for the specific field will start using the data to test potential intuition. So, obviously, how do you come up with an idea? It's up to you. Meaning that where I used to be a pro developer back in time on equity volatility, you can come up with ideas simply because you're staring at a Bloomberg screen and you see patterns, for instance, around intraday delta hedging, and you start thinking, every day at Kansas at the close, these things get additional acceleration to the close due to potentially some people trading on the back of it. Could be you reading research, academic research, you speaking to colleagues. Many times you have a lot of interesting ideas simply by understanding what people do on the floor and what clients do on the floor, and also ultimately as well academia, and most importantly, I think of all is speaking to clients, because ultimately the starting point is what is the need you are trying to address. You're not trying to create something in a vacuum, no? So speaking to clients, you find that maybe multiple people have the same problem and you try to find a solution. So you then, with the data, try to um, test your idea. Uh, Example, I believe that selling treasury future options provides a positive carry once someone put it on and delta hedge it and create and try to monetize this basically implied minus realized premium. So I sell options, I collect something, and I need to pay out something else. So hopefully I will make money by doing this. That's my assumption. You test it, and then you need to go to the full rigorous testing. Typically, for a flagship strategy, you might do, well, no, hundreds of tests of do I pick calls, puts, which maturity, which tenor, so which tenor, which underlying to start. How do I also size those positions? Because let's assume I want to focus on call options, above 30% delta, sure. Uh, how do I size them? Do I do equal notional, equal vega, gamma weight, whatever? So you need to test all of these, and then be also truthful to yourself about your testing. Try to minimize the temptation of optimizing too much, because in my simple example, again, I want to create a strategy that is doing carry on treasury option, So I sell those options, I collect the premium, and I delta hedge them, and I pay up. This is my strategy. Then, by definition, maybe the 3% strike, 1.5 month maturity is going to have the best Sharpe ratio. So you're tempted to say, hey, that's the one. By definition, then, either because you don't have enough capacity or because you're simply data mining, maybe that specific path in the last 10 years was the one that was never hit. So it's the best strategy of all. So you need to be truthful, which is obviously part of a process that is basically peer review by colleague, the committee review of your strategy, and trading review, and ultimately client review, because you propose this to clients and you see the feedback. So assume basically literally month of work on this, you come up with one flagship implementation of a strategy. I found all the parameters, that's the strategy set, and let's compute it. So I have a full 10-year vectors of the strategy. From this point onwards, the strategy will be live and alive by its own life. Then, second step is there is a team called origination that instead will work with our sales force to bring those ideas to investors. So basically bringing those ideas, some marketing material, and some specific land discussions where you say, hey, this was my idea. What do you think about it? Does it fit in your portfolio? Does it suit in terms of risk you're trying to capture? Hopefully the answer is yes. By the way, in this phase is also long. It could be that I see all the time you go with flagship strategies to clients the same way you go when you are in a restaurant. You read at the menu. No, you need to know what is our suggested mains, what is our suggested desserts, and what is our suggested entree. Uh, Obviously, then people can add and change parameters and asking to remove something or to add something else. So the origination process is also really dynamic. But assume that then you end up with a specific implementation. You get with them, you get a trade basically, and then the implementation of the trade pass through um, the the official implementation of the strategy by our independent calculation team that is completely separated to the business, so that you don't have conflict of interest. Is also regulated by multiple regulators and rules, specific rules, and internal governance committees. And once you have the official index up and running, then you can trade with your trading desk, which will offer this exposure in many formats. Could be funded format, derivatives format, option format to the end investor. And the trading desk is basically executing. You can say it as is executing on behalf of clients the strategy. Okay. So and that's it already starts, because obviously then you then have post-trade services about this decomposition to clients. You can have modification of this strategy, additional other strategies, and continuous development. Because once you develop something, I would say the typical life cycle of a strategy is in the range of some years. You don't, I would say, if I think about what was the flagship way of doing volatility carry 10 years ago, has nothing to do, in equities, let's say, has nothing to do with what is now flagship way to do volatility carry. Nothing to do. Like none of the old strategies are actually the considered at par implementation nowadays in any bank. And the reason is it's a bit like evolution of technology, no? That you don't buy a 10-year-old phone and thinking it's good enough for nowadays standards. Exactly the same concept.
Right. Okay. You briefly touch upon customization, and that seems to be a big topic when people talk about QIS investor. And I mean, really, the investor have such different needs. You have pension, hedge fund, your private client, your so. How do you go about you know customizing and be able to fit all these different objectives? So is it just like tuning a few parameters in the model, or is there more to it?
Mm. I think there are two ways to see this. One is sometimes we just act as um, execution of ideas directly coming from clients. Sometimes we don't even need to know what the idea is behind. Meaning you have maybe clients can trade a portfolio of I don't know 200 instruments, futures, options, whatever. They give orders and they create their own team without even us being having to inquire of what is their investment objective to start. This is what would be called like managed indices, and we have a platform called Atlas to do this. In that case, is none of our IP to be deployed there. This obviously is a part of the business. I don't think it's the majority. Typically, on the customization, as I said before, you need to have your flagships, in my view, simply because you want to make sure you have a stronger. You need to have some idea of what you're doing, and you say if you want to do vol carry or if you want to do hedging, this in specific asset class, this is our two solutions. This is the way we will do it. And this is important because you need to also to be truthful to your style of development, the style of the platform. Everybody has some different ways to implement things, and you want to show basically what is your style, because not maybe your style is not for everyone, and maybe some people might like particularly the way you develop strategies. Um, but then customization then comes, as I said, on an ad hoc basis with I would say nowadays I cannot tell you the exact percentage, but I would say at least let's say 50% of the action they end up in specific variations. Now the variation are maybe modification of the flagship to fit specific portfolio needs. Where I think we have the most entertaining discussion, and when indeed we are somewhat the expert providing the solution, is typically on execution. So this is also part of the evolution of the business, in the sense that up until call it 2019, pre-COVID, this business was labeled as risk premium. You might have heard this term in the past. So banks were competing more against hedge fund, or the pitch was more the real money account. Don't invest in hedge fund and pay in 220. You can do it in QIS. It's cheaper, and you can get the same. Now, this pitch was a bit short-lived in the sense that, by definition, then you end up putting in a portfolio 50 strategies, try to be a multi-strat. But because you are not a fiduciary, you cannot actually change every week the strategies, the balance, risk manage becomes an extremely complicated process. And also, by the way, that's not the work of a non-fiduciary. So fiduciary, asset managers, hedge fund, they have indeed people dedicated, portfolio managers dedicated to risk management. While banks, by definition, they are broker dealers. So we sit in between. Uh, while instead, where we are the expert is on execution. So by definition, banks, they have amazing pipes for executing everything. I'm thinking about your previous question about when we set up QIS here. We, of course, also levered on our amazing rates franchise and fixed income franchise. Uh, for execution, access to liquidity, so on and so forth. That is where actually we can be entertaining infinite discussion around when to execute, how to execute, what time, how many times, size, capacity, so on and so forth. So that is typically the input from us that doesn't really change because we say that's the capacity that we can do, that's what we suggest to do. And then instead, from a client perspective, is more the design of the risk. I want to be more skewed into downside puts. I want to be more skewed into something longer gamma, shorter vega, whatever. Then becomes more of a fine tuning of the risk, which indeed is more a fiduciary decision, but is more sitting with clients.
So what's really been driving the demand for QIS investing the post-COVID year? You mentioned, is it the
It's
need
been,
for
I think,
execution service, or is it?
there has been, I think, the change in paradigm that we saw in the way the investor saw QIS. So I give you our own experience because, as I said, so nowadays we're a leading platform in this business. Obviously, at the beginning we had to build. So again, 10 years ago we had to start and build a franchise. Um, we experienced this. One of our differentiating point was to say use QIS to do portfolio overlays, and don't use it as a, I will say, cheaper multi-strat hedge fund, because that's not, I think, what banks are good at. But instead of sitting in the alternative piece of the portfolio, enter the core portfolio, be maybe the platform providing equity hedging solution, equity carry solution, a rates hedging solution, so on and so forth. And that is actually where QIS can be amazing because if you, let's say, even if you're an hedge fund, you're a multi-strat, you have multiple already pods, all made of really competent individuals. But it might be that at the top level, you have risk coming at you that you don't want to, that you want to systematically hedge. You want to be longer gamma on the downside in a minus 10% scenario of S&P, example. So that is where a portfolio overlay systematically implemented can really help you. And this, I think, has been what has changed completely the way people are using QIS. And this is why, for instance, the biggest part that grew in the last 3 years, let's say, exponentially, has been the usage of hedge fund or QIS. In the past, I would say pre-COVID, you couldn't have a QIS discussion with any hedge fund, pretty much. After, when people understood what this is actually the average cheaper way to implement portfolio overlays at more higher level of risk management, or a cheaper way to implement a specific strategy, then this ultimately makes a lot of sense. And also with the increase of usage of more complicated products, option, short-dated options. I think about, I know, our dispersion index that has been really successful is managing 10,000 and thousand of options contemporaneously. By definition, doing this in-house implies having maybe 2 dedicated traders. So it makes a lot of sense to source it. The moment you go to short-dated options, 0 day, 1 day, 2 days with intraday hedging, this becomes a proper full-time job of someone. And maybe does not make sense for everyone to have a dedicated PM just doing a 1 day S&P option and delta hedging them throughout the day. But you can actually, at the right price, you might be really, it could be economical, really economical to outsource it. This has been basically the complete change in paradigm. Then, as having said that, let's not confuse QIS as a passive benchmark tracker. So we're not speaking about strategy which are, excuse me, my French, dumb. They're not. They're actually quite sophisticated. There is a lot in it. Hopefully, we bring a lot of intellectual property. So the intuition should be simple, but then the implementation maybe is particularly sophisticated. And there's a lot of research and studies behind. But it's different from saying invest in my strategy because he will deliver to you for sure 3 sharp and is going to be competing with the best multi-strat out there. Is different. The proposition is really different. It's more to say use it as a portfolio overlay.
Thank you. Very interesting. So Of course, with any investment approach, there are challenges. So what are some of the biggest misconception or concern your investors have about QS?
So I would say, I mean, I would say the first concern typically comes with transparency. So people which are not used to the product, they might say, okay, I buy exposure to a specific Bloomberg ticker. Um, what is inside? How do I know that I'm in control of the risk? And but the answer to this is typically, let's look into this and let's have specific risk reports, because by definition you can have full look through on everything you're trading, and we provide this really proactively to clients. And so typically this is the work I was mentioning before of origination. You start with an idea and then you give look through analysis, portfolio analysis on specific scenarios, because clients will have specific risk scenario, either for regulatory reasons or for own portfolio management reason that they want to that they really do care about. So you might want to do this. This I would say addresses the first concern. Um, then I mean, I will not call it a concern really, because maybe the second concern could be, I mean, you can call it a concern, let's say could be cost, but cost again, same stuff, is fully transparent. Everything is there. So there are no hidden fees, everything is disclosed. So as long as you're comfortable of the charges at single instrument level and overall charges, as I said, people are smart. They can simply make the math of how much will cost them to do in-house versus outsourcing, comparing banks. This has been really, really, I would say, easy as well for investor to address. So yeah, per se, those are, I would say, maybe the two main concerns, but it's part of our job to actually address them in the cleanest possible fashion, because as I said, everything is transparent. Those are not meant to be black boxes. They're meant to be extremely transparent, fully replicable indices, basically.
Okay, great, thank you. So looking ahead, where do you see QS platform evolving in the next 5 to 10 years? Are there any trends or innovation you're particularly excited about?
Mhm. So, yeah, look, obviously I'm biased, so somewhat in it. So by definition, I'm bullish. But I was actually asking myself last year, because we experience the industry experience a large growth. I would say probably the world that has been growing for the last 4 years in a row systematically across the street. We specifically had an exponential growth for our platform, and I was almost wondering why for the industry. What is the reason of this? Because this has been obviously us industry and us city hopefully doing a really good job to provide to investor solutions, but also you sometimes you feel like it's almost happening to you. No, there's even an over demand of this, and you're asking why. First explanation I give to you is technology, meaning uh, if I think about how a flow trader or an exotic trader in various divisions or the traditional trading desk are run nowadays versus 10 years ago, I don't think the difference is that big. So the way they see that is, the way they act, the way they execute is not that different. The way also they interact with clients. If I think about QIS 10 years ago, maybe 12 years ago, let's say, was Excel based. Was few tab of Excel, data, some VLOOKUP, index match, whatever, and you compute an index that was maybe trading two rolling futures. If I think about QIS today, but even to QIS already 5 years ago, you're speaking about hiring data scientists that are managing non-sequential databases. Those people then are being interact with extremely sophisticated product developers. Excel is not even open anymore. So if I think about that, I say technology, because we are able to deliver a product that is simply not matched, has not been matched by the evolution of the rest of the floor that I observe. This is number one, and that's my first explanation. And the second explanation is that demystification of the product itself. As I said multiple times, in while originating transactions, we used to have the feedback of this is too expensive, this is a black box, this I don't understand, this is a back test, then it will never work after. Like this, like really official comments, which are obvious because people should be skeptical. No, it's a bit like with crypto. No, first comment is worthless and useless, and then maybe you go to it and you understand maybe that is there is something behind. So what happened is that simply people went to spend the time, and now the QIS product is adopted throughout the full industry because we see family offices, asset managers. So we have many accounts that were always there. So insurance, pension, asset managers were there all the time. But hedge funds, as I said, family offices, retail, different products obviously for retail, but you have the full spectrum. Because I don't think there is an investor that does not know the concept at least of QIS. And this has been, of course, part of it has been the good job that the industry did. On the other side, I think is also the people seeing something in it. And this is what is driving this. So from here, if I look at the future, you say, okay, what will be the drivers? Number one, technology. Technology and I would say sophisticated execution of complex strategies. Is this going away? Don't think so. If any, will continue to proceed in this way. Think about again 0 day option, 1 day option. They used to be non-existent 5 years ago. Now they are also existing in different asset classes. Point number one. So that's not going away. So that trend will continue. And the second trend is, as I said, adoption by investors of the concept. So people spending time understanding the technology behind and understanding that actually it's not the black box at all and is not that expensive neither. So those two elements are not going away because the moment people did the investment, in theory, it will continue to reinforce itself. And it's no longer a business concentrated in few pots. No, it used to be maybe concentrated in some specific regions, some specific client types up until, let's say, 5 to 7 years ago. Nowadays, you have hundreds of client type, totally different client needs, really balanced platforms as well. Like if I look at our platform, is pretty much equally weighted between like hedging and carry, pretty much literally uh, not exposed to a specific risk factor. You say, okay, if tomorrow VIX goes to 30, everybody's down. Not really. It could be someone is up a lot. So it's a platform the way it should look like.
Okay, great. Thanks. Michele, this being a great conversation. So before we wrap up, I want to take a step back and ask a more personal question. So over the course of your career, what's one big lesson you've earned, whether about investing, leadership, or even just navigating this industry that you think our listener should take away?
I would say the first one, obviously, which is quite maybe naive, is learn from the mistakes and don't think you're always right. In the sense that obviously, specifically when you're successful, you take momentum as a team. You might be complacent and thinking we're gonna make everything right all the time. So be always hypercritical about what you're doing. Look at what other people, competitors. Don't be dismissive. It's really simple. It's really easy to fall into the trap of thinking you're the best, you're winning all. Everybody else doesn't understand anything. So instead, think that actually maybe in the small bank somewhere, someone actually there's going to be some extremely talented individual you want to speak to, and actually, if you hear that someone in another really small competitor is succeeding in a region, don't think, "Ah, no, for sure it's not true." Think actually, wow, maybe we missed out something. So be humble in the sense, and it's not only, as I said, not only learning from your mistakes, but actually think that there is always something to learn from everyone, clients, but also competitors. The second item is instead, I would say, more related to like team building and also, I would say, creation of a brand in the sense that I think it's always a struggle to try to differentiate yourself, but you need to try to create. I think I learned to the years to try to create something that is people can speak about, people know, people can differentiate for something else. Put some rules, some let's say, frame around what you're doing, and offer this frame to investors, and offer this frame also to people internally to work for you. And by definition, this might not work for everyone, meaning that you might investor not liking you, you might investor loving you, you might have people loving working for you, and people that don't like to work for you. But that's okay as long as you are able to um, continue to grow and differentiate yourself and have a specific style, and also be true to yourself. Like, don't keep deviating your style because you heard that someone else is doing something else and you try to cover all the all the battles. So sometimes you lose some battles. Focus more on the medium to long term win of the overall, I would say, effort. That I would say maybe are the two main lessons learned throughout.
Michele, this has been an absolute pleasure. Thanks so much for taking the time to join us today. And to everyone listening, thank you for tuning in to Resonance Spotlight. If you found today's episode insightful, make sure to check out resonancecapital.com. We've got a wealth of resources on QIS, including articles, white paper, and index data to help you dive deeper into this space. Stay curious, stay informed, and join me next time as we continue exploring the world of investment strategy and the people shaping them. I'm Vincent, and this has been Resonance Spotlight. Until next time, take care.